Come on in, sit back and relax. You're listening to the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features interviews, news, and analysis on the trends and best practices all around wealth management technology. My guest for this episode was Maxwell Lane, CEO of Flourish. We spoke about the private bank for independence strategy that Flourish is employing, Flourish Cash, how it's driving AUM growth for advisors, their new product, Flourish Lending, accelerated by their acquisition of Sora, and their business model and enterprise partnerships and how they're using AI. And speaking of AI, it seems everyone these days wants to talk to us about oversight and management of AI, but this is only possible if your underlying tech and data strategy is designed with AI in mind. If you're running a wealth management firm and have questions about how you can best support and control your growing AI infrastructure, I want to tell you about a terrific offering from Ezra Group. We call it our fractional CTO service, or Fracto. Our Fracto service can support your current CTO on specific projects or help build your tech stack and data strategy from the ground up. Our Fracto service puts Ezra Group's senior consultants in your corner on a monthly retainer. We can fix your integrations, clean up your data, and execute projects that have been sitting on the back burner for years. If you want to free up your firm for exponential growth, you need to run, not walk to our website, ezragroup.com, and click the golden Contact Us button on the homepage to schedule a free consultation. We know what works and what doesn't. All right, now my standard housekeeping chores. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. Please make sure to check out our sponsor, the Invest in Others Charitable Foundation at investinothers.org. And if you are a software vendor in the wealth management space, please make sure to register your product on our Wealth Tech Integration Score vendor portal at ezgroup.com/register. Now, let's kick this thing off. All right. I'm excited to introduce our next guest. It is none other than Max Lane, CEO of Flourish. Max, buddy, good to see you.
Good to see you, Craig. Thanks for having me back.
It's good to see you back. It's good to see you on Zoom. I've seen you on the road. I've seen you in conferences. I haven't seen you walk in the streets of Manhattan, but I know you're there.
I'm here every day. I'm here almost every day when I'm not seeing you at conferences.
Yeah. Right. I'm in Manhattan a fair amount, but I don't run into you. But I'll have to start maybe going a little bit more down to your area.
Please do.
What neighborhood are you guys in? You guys are in Midtown?
33rd and Park. So
Yeah.
Kips Bay, if you want to be
Right.
specific.
That's Midtown-ish relatively.
Yeah.
As long as it's above 32nd Street, I think is Midtown. Or even even sometimes above Houston Street could be considered Midtown, depending on who you talk to.
That's right.
So we're here to talk about. We're not here to talk about Manhattan. We were talking about comparative religion. I don't know how we got on that topic because it's we're recording this during the very week very very important for Catholics and Jews and other Christians. That it's a week the Passover starts. It's Palm Sunday this week, but this recording is going to get dropped a couple of weeks from now. So we're not going to talk about any of that because it won't be as important. But that's how we got in that conversation. But now we're talking wealth tech. It's a whole different podcast. And so if you can kick us off and give us a 30-second elevator pitch for Flourish.
Sure, will do. Our elevator pitch to advisors would be that to fully serve clients, compete, grow, and win in this new world of wealth management, advisors must pair holistic advice with true holistic implementation. And what I mean by that is the majority of advisors today who say they're doing holistic planning, what that really means is they're creating comprehensive financial plans that really do touch every part of their client's financial life. But when it comes to the execution of those plans, they're still largely leaving huge parts of the client's financial plan unexecuted, unimplemented. Think deposits, lending, insurance, tax, trust, and estate. And while there's been a rise of new solutions in those categories, it's not yet ubiquitous within the advisory space. And so that's really where Flourish comes in, is we want to help in that journey in evolving from holistic advice into true holistic implementation. The way we do that, we're a wealth tech platform that's exclusively serving independent RIAs, really focused in the cash, lending, and insurance categories. You can almost think of these as the banking and insurance categories, if you will, helping them have great advisor-centric solutions to help their clients get a great cash account, secure great rates and a great experience on loans, and be able to bring in annuities into their practice. What we do today, we've been doing this for several years. Today, we're working with 1,200 RIAs. They represent 2.6 trillion in assets. Outside of the breadth of firms we work with, we're very proud to work with some of the most influential firms in the country: Focus, Carson, Mariner, and we're happy to talk more about that today.
I hope you are, because I'm going to bring it up. So get ready. Uh, so the first question is you kind of touched on it a bit. So you guys started out as cash management a while back and did really well. Got acquired by Mass Mutual, so you definitely made some waves. And now you've expanded into, as you mentioned, lending and insurance, and now mortgage lending. So can you besides the holistic nature of it, which we understand, is there another strategic thread running through all this? Like what's driving you on these specific decisions to expand in these specific areas?
Sure. I think the way to think about our roadmap and our product strategy is that in some ways we think we're creating something akin to the private bank for independent advisors. And so if you think about where many of the advisors who are now RAs, where they came from, many of them passed through a wirehouse or another advisor distribution network associated with a bank, where they had access to a more holistic suite of products and services to really serve every one of their clients' financial needs. One of the trade-offs, as you know, when advisors go independent, they get a lot of benefits as far as autonomy, control, choosing their own tech stack, their way of running their business. But they've lost the big financial institution that gives them the platform of products and services to serve their clients. I think one of the last remaining gaps in the independent advisor tech stack is in this private banking category, which we define as banking products, both deposits and lending, some insurance products, tax trust and estate. And you're seeing that in the broader wealth tech space, that we're not the only ones with this observation. We're just zeroed in on that deposit, lending, and insurance category to try to piece together the private bank for independence, really give them the tools to compete with the Morgan Stanleys, the Merrills, so that whether it's an advisor thinking about going independent or it's an end client thinking about which advisor they work with, we want to be in a position that advisors can choose the model that's best for them without giving up the products and services they need. And end clients can choose the best advisor for them without having to say, do I need to choose the best advisor or do I need to choose the best mortgage rate I can get from a big wirehouse? We think we want to take that away, really position independent advisors on an even playing field to help them compete and win and do right by their clients.
Max, I'm going to blow a little smoke for you
Okay.
here. That I have been beating the drum on holistic advice for 20 years here because I think it's a huge opportunity that's sitting on the table for advisors to be more of a financial life coach. And people have very complex wealth and financial issues, even if they don't really have a lot of money. You don't have to be an ultra high net worth category to have complicated financial questions that you need an advisor to answer. As you mentioned, deposits, lending, insurance. You guys have annuities. Everyone's got a mortgage. Everyone's got car loans. They may have personal loans. They have educational loans. There could be there could be business loans, right? Commercial loans. I run my business on QuickBooks. They're always pitching me for a loan. I click here for a no, a no, not companion loan, but they don't require any not down payment or any collateral, right? They'll just give you a loan for 12 or 15%. But that's like, oh, so easy. Push the button. Should I do it? I don't know. I would love to be able to have an advisor who I can answer those questions to. So I really think having a service like yours can be beneficial. I've never heard it called a private bank for independent advisors. So I like that positioning.
Thank you. Yeah, no, I couldn't agree more. And I think one of the things, just to build on what you're saying, I think one of the things that is shifting, but we're not all the way there yet, is advisors, I think, have an opportunity to just appreciate from an end client perspective these different categories, whether it be banking, lending, insurance, investments. I think from an end client perspective, it's all just quote unquote my money. It all matters to me. Yet we've zeroed in as investments are the most important thing, and we're only going to focus there. But your average consumer, your average advisory client cares about a lot of different things. They want it
Mhm.
all optimized. And so I think at times there's this mismatch between client expectation and ability to add value and really do more for your clients and being laser focused on the portfolio. Of course, the portfolio matters, but to your point, I mean, a mortgage is a highly consequential financial decision, not to mention how personal and emotional it can be if it's associated with your primary residence. Absolutely, I want my trusted advisor to be walking with me through that process, helping me navigate the different options to make sure I get to the best outcome for me.
Yeah, I couldn't have said it better myself. Yeah, and I think that there's so many other issues when it comes to credit, when it comes to budgeting, when it comes to other areas that advisors are leaving money on the table. They could charge for that. And I think
Totally.
people would pay to have one trusted source for all these things. And it's important to know if you don't realize that a client has significant credit card debt or other loans or other lending issues or money in some other area that you can't get access to because you're not giving advice on that. You're leaving money on the table. You're leaving wallet share.
Totally. 100%.
All right, so let's talk about some of your research. Some research you cited said only 5% of advisors consistently discuss cash holdings with clients, even though 95% acknowledge it's their responsibility. So clearly, it's not a technology problem. Their systems show them the data is there. It's a behavioral problem. So what are you doing to nudge advisors to have that discussion with clients?
Sure. Yeah, I think this builds on what we're talking about. I think couple of things we're doing, starting without the technology, as you say, because I agree. First and foremost, I think it's a practice management problem more than it's a technology problem right now. Is education, and not education that um, the cash is out there necessarily, though we do find in our data that advisors consistently underestimate how much cash is out there. From our survey data, advisors thought that clients held an average of 7% of their net worth in cash. Typically, it's 30% from what we see in actuals. So the gap is much, much larger. But we really reframe that around education on the upside for the advisors first and foremost. As you said, Craig, you're leaving money on the table. Of course, adding client value, that is important. That's sort of the promise of wealth management is why you get into the business. But from a commercial standpoint, you should not want your clients holding hundreds of thousands of dollars away from you. And certainly you don't want that if you don't know about it, right? So understanding that there's an opportunity to pull that money into your orbit. And in the case of Flourish Cash, as zeroing in on one of our products, it's great. It's a great business decision to do that because what we find in our data is that with Flourish Cash, we take money from the banks, right? A client had hundreds of thousands of dollars sitting at Citibank. Now they put it in Flourish Cash. That creates a planning opportunity. And over time, a big portion of that money makes its way into the custodians. And so, on an aggregate basis, we have contributed over $900 million in flows into the fee earning portfolios. So, we've basically created a $1 billion RIA back into our RIAs simply by connecting them to their clients' bank accounts and their clients' cash positions. That is a good business decision to pull assets into your orbit. So educating them on the opportunity, I think, is step one of this is a good decision for you, Mr. or Mrs. Advisor. Second is picking up what I said earlier, highlighting to them that your end clients want this. They are paying you 1% of their AUM. They want holistic advice. They want it all integrated under one advice umbrella because, as you know, what you do over on this side can impact what you do on this side. And so they want everything tied together, integrated, thought about holistically beyond the portfolio. All of it matters from a client standpoint. And then third, which is where we come in, and which technology can help with this, is how can you remove friction? Anytime you're asking anybody to do something new, do something a little bit different than they typically do, you want to make that as easy as possible. And that's where having modern, elegant technology, streamlined integrations, reliable data reporting, all matters because if you make it too hard, you're just going to make that change management all the more difficult for the advisors.
Indeed. Yeah, we don't want it to add friction to
No.
advisors' operational workflows. We've got enough. Earlier, you mentioned some of the really large enterprise partnerships that you have closed: Focus Financial, Carson Group, Mariner. Those are gigantic firms. So can we talk about how those advisors are using Flourish? Why, and also why do those large firms pick you guys? Why did they see that? Like, besides the obvious reasons why we just mentioned, what was the reason why they wanted to build your technology into their platforms?
Sure. Yeah, we're very humbled and proud to work with these enterprise RIAs. Every enterprise deal is a little bit different. As far as how they chose us, I'd say two typical general patterns of how we ended up having these enterprise partnerships. Number one is more of a bottoms up phenomenon. And so in the case of Focus and Mariner, these are quite large enterprises, advisory teams and offices all over the country. They're also quite acquisitive, so they're adding new teams and smaller RAs all the time. In both the case of Focus and Mariner, the way the formal partnership, the genesis of the formal partnership was that we were already working with a subset of the advisors, right? And so they had the proof point because organically these advisors found Flourish to be additive to their practice. They were getting real results. Clients were happy with it. And so it's then easy at the top of the house to say, hey, this is already working for a percentage of my advisors. I'd love to formalize this and be able to roll this out more holistically throughout my organization. So in the case of Focus of Mariner, it was that bottoms up phenomenon. In the case of a firm like Carson, for instance, Carson's a very thoughtful, progressive, forward thinking firm. They were already convinced on the need of having a great cash management solution for their end clients and for their advisors. And so when they came to us, they were out looking for almost an RFP, right? Who's the best of breed here that we can work with because we know we need a solution here. And Flourish showed up well. We've been fortunate that we've invested very heavily in the experience, not only in the end client experience, but the advisor experience. A lot of that is down to the enterprise readiness, things like integrations, things like roles and permissioning, things like mapping the data model of a wealth management firm inside your system. I'm getting a little bit nerdy here, but you know how important that is when you're serving a very, very large firm that needs to map its organization to the technology and make sure it has good controls there. And so we showed up very well in that experience with Carson, and we were fortunate to win the business. And now they're one of our strongest partners because, again, they're a very forward-thinking firm. They know how to mobilize very well. And with Flourish being really the tech-forward solution, they realized they could get adoption very, very quickly because of all the investments we made from an enterprise readiness perspective.
Now, are these firms forcing their advisors to use Flourish, or are they just offering it, or are they incentivizing them to use it?
It's more of the general approach is more of a curated, approved platform that is deeply integrated into their workflows, right? And so in the RIA space, being an independent advisor kind of comes with an entrepreneurial spirit, I would say. And so very few RIAs are heavy-handed in a way, say the wirehouses maybe,
Hmm.
right? It's sort of it's a different organization. So it's more of we're going to go ahead, we as home office or top of house are going to go ahead and curate a best of breed in our platform. We're going to educate you on the use cases. We're going to make sure it is seamlessly integrated into our platform from a reporting standpoint, from an adoption standpoint, make it really easy to use. And then we're going to do some marketing support and some education, but it's not a forced use case. And so
Hmm.
that is where the product still needs to stand up on its own. We need to be out there educating advisors, answering their questions, and really proving the value day after day, which we're fortunate that so
Hmm.
far we've done a good job of that.
Very fortunate, indeed. All right, so let's talk about the mechanics of Flourish Cash, if we could. So you offer up to 30 million in FDIC coverage for a two-person household through your program bank sweep model. So how does that infrastructure work at scale? How many program banks from the network? How does the cash get allocated across them? How do you manage rate consistency for clients?
Sure. So structurally, we are running the same structure from a program bank suite perspective as a lot of other financial institutions. Think of Schwab or Fidelity. If you have a brokerage account at Schwab or Fidelity, you have uninvested cash. The default is often it goes into their brokerage sweep program. Structurally, it's the same structure. The innovation that we had was twofold. One, we flip the economics on its head. Rather than keeping the lion's share of the yield from the program banks for ourselves, we pass through the majority of that yield to end clients so that it can be positioned as a saving solution, a cash management saving solution. Innovation number two is we built all of the advisor and end client functionality around that account so that it has all the bells and whistles one would need in a supercharged cash management account. I, as an end client, can easily process transfers, whether that's ad hoc or in an automated set it and forget it basis. I've got visibility into statements. I can see all my transactions. I can hook up my existing bank accounts. And then as an advisor, I get visibility on top of that whole thing. So structurally, it's the same thing of typical program bank sweep. We pass through more yield and we add a lot more functionality from an experience standpoint. As far as how the allocation works, this is really one of our core competencies. As you mentioned, this was the first product we brought to the market in 2018. It's a product we know deeply. And back in 2018, we had to build everything ourselves. And so we sourced all of our own banking relationships. We built our own allocation algorithm. So we own the whole thing soup to nuts, which gives us a lot of advantages from an experience and control perspective. How the allocation works, every day, end clients are moving money in and out of the system multiple times throughout the day. That allocation algorithm I'm talking about is parsing out the deposits across our currently 39 program banks in our network, optimizing to make sure that we are staying under those FDIC limits and making sure we're also being good partners to our banks. So when we work with our banks, there's an agreed upon target of what they're looking for. So we're weighing all of those different priorities in our algorithm to make sure we're keeping, of course, our clients happy from an FDIC perspective and also our bank partners happy, because our bank partners happy is how we get the great rate that we can then pass on to our clients. From a rate consistency standpoint, which is, I think, the final part of your question, one of the great things about Flourish Cash is how simple it is. It's not simple to build what I just described to you, but from an advisor and end client perspective, it is very simple. We pay one single rate on every dollar you give us. So regardless of where an end client's money is allocated across those 39 banks, they are earning the same advertised rate from Flourish, which today is 3.25% APY. So within the algorithm, if Craig's money is at bank A and Max's money is at bank B, that does not impact our experience within Flourish Cash from a rate perspective. It is very, very simple. One account, one rate, one statement, one 1099, and that's by design. We really wanted to make things simple for our advisors and end clients.
Sounds simple. I like simple too. Simple is hard to mess up. All right, so here at Ezra Group, we do a lot of tech stack evaluations for wealth management firms, evaluating what they're operating on, what's working, what's not working. And how do I cash management is increasingly showing up, as we're seeing with a lot of firms we're working with, as a standalone line item on RFPs. So when you're in a formal evaluation against some of your competitors, what's your differentiation argument beyond yield rates and FDIC limits?
Sure. Yeah. So if we say rates and FDIC are becoming table stakes, right, and that all of them are paying a high competitive rate and giving you elevated levels of FDIC insurance, the three things I would highlight of where we show up well. Number one is the simplicity, which we just talked about. Again, we pay one rate in one account, one statement, one 1099, very easy to understand. Many of our advisor-focused cash competitors cannot make that statement. That makes things very, very simple. Also makes the use cases very simple for an advisor to understand. This works for my client who wants to put in $10,000. It works for my client who wants to put in $5 million. That's great. Because as you know, advisors are trying to minimize vendors and they don't want two cash solutions. They'd rather have one. Second is the experience. Really at our core, we are a company of fintech builders who obsess over the experience we deliver, not only in the technology, but also on the service side. And so we have invested heavily in making sure it is very easy to use as an advisor. It's integrated deeply into the advisor workflows. And then from an end client perspective, it is on par or better than choose your direct to consumer fintech application, right? We want it to be a modern, elegant experience, easy to use. We don't want to add friction and stress when we're talking about people's money. to people's money. And then number three, I would say, is stepping out of the cash product itself is the fact that our great cash solution is part of a larger platform. As I mentioned at the top, we are building something akin to the private bank for independent advisors. And so the fact that you get access to a leading advisor-centric cash solution, as well as a lending product, as well as an annuities capability, adds a lot more value when you think about I'm an advisor. Again, I'm trying to minimize vendors. I'm trying to get more bang for my buck. I want to minimize complexity on my side as a firm. If I can work with a Flourish who gives me access to deposits, lending, and insurance, as opposed to having three of those vendors doing it themselves, that is better for me as an organization. And I'd particularly highlight the early warm reception, more than warm reception, we're getting on pairing deposits with lending, right? There's such a natural synergy between those two products that separating those two is going to be harder and harder over time in a good way, right? It's just we're recreating banking services in the sense of I can have my deposits and lending all in one place.
Yeah, that's true. I mean, people don't understand the complexities behind some of this stuff. All right, so going down a little more, drilling down into lending. So you recently made an acquisition of a company that I was an admirer of called Sora Finance, which had liability analytics and ability to help advisors evaluate clients' loans and give them recommendations. So, what does that do for you? What benefits has it provided you with? Have you integrated it into your platform?
Apologies there. So we acquired Sora Finance just about a year ago. It was around this time in 2025, and we were also admirers of them as well. There were three main things we bought and were the big drivers of the transaction. Number one was the technology, right? They had some very interesting technology from a liability aggregation standpoint, from an analytics and optimization standpoint. And we're doing some very cool things around how do we take liability data and push next best action opportunities to advisors. We really liked that and admired the thought and design and taste that went into delivering that service. Second was the regulatory infrastructure. So for those who don't know, mortgages are regulated at the state level. And so to be a mortgage broker nationally, you have to be approved and be compliant with not only the 50 states, but also Washington, D.C. and Puerto Rico. And it ends up being over 50 different jurisdictions that you have to do business with.
Hmm.
Sora already had a mortgage broker that was approved and licensed and compliant in a handful of the most populous states in the country, which gave us a leg up from a speed to market perspective. And then third, I'd say, is the people. Rohit Agarwal, who was the former CEO of Sora, who's now our GM of lending, really built an incredible team over there. He's an exceptional leader. We're very privileged to have him join. But his team, being able to get all of that institutional knowledge from a team that had been building in the advisor lending space for 3 years at that point.
Mhm.
As a technologist as well, Craig, just how much that accelerates your learning and not having to repeat the same mistakes because they've already made certain mistakes, right? And they can
Mhm.
educate us of, nope, here's how we want to do it, and I'll tell you why. That absolutely helped us in the journey. So Sora, when we bought it, how's that transition into Flourish Lending? Couple of things. Number one, we took a component of their technology from a liability aggregation standpoint and turn that into refi monitoring, which is one of the key selling points in Flourish Lending. An advisor and end client can hook up their existing real estate, their existing mortgages, will actively monitor in the background when they're in the money on a refinance opportunity, and will push those alerts to the advisor and clients. That was all sourced from the Sora technology. Second, and this was more in collaboration with the original Sora team and some folks at Flourish, we collectively built a new mortgage experience. And this was a piece that was maybe missing from the old Sora platform, which was they were doing more of a warm handoff to some partners. We said, we're going to go ahead and rethink this thing soup to nuts to deliver an amazing rate experience. We're often beating bank offers by 50 to 100 basis points.
Hmm.
Pair that with refi monitoring, have that
Well,
deeply integrated into Flourish Cash, and then also add on in-house loan officers so that from a servicing perspective, advisors and clients are only ever interacting with a Flourish employee. So we can really control the experience, not only in the technology, but in the human experience as well. And so when we put those together, that's how you get Flourish Lending, which we just launched, which we think is better than if Sora did it by itself, and better than if Flourish did it by itself, right? We really felt like it was 1 + 1 = 3 from that acquisition.
That's excellent. And I can't believe we're almost out of time. Let me just squeeze in one more question. It's got to be
Sure.
the AI question. So what is it? There was some AI around what Sora built, and they had talked about using AI to deliver better advice to advisors. Is that working, or as you enhanced it, does it do underwriting, rate optimization, proactive refinance identification? What are some of the things that the Sora AI now does for you?
Sure. Yeah. So Sora pre-Flourish, as I mentioned, was doing more things than we're doing today. And so I think when we think about not even AI, just technology, where we start is how can we add value to advisors and end clients? That's question one. And then question two is what technology do we need to use to execute on that? And AI is a very, very powerful tool, but it is just another tool that is at our disposal here. And to give you an example is refi monitoring. Refi monitoring is getting an incredibly strong, warm reception. The adoption we're seeing, having just been at time of recording, we've been live for about 2 weeks. The adoption is staggering from both advisors and end clients. No AI in that product, right? That's using old technology, if you will.
Right.
What we're doing internally is developing more AI-driven optimization tools that existed more on the Sora platform and figuring out how do we bring those into the lending platform over time. So I won't give too much away, but more will be coming to help in both a proactive and in a upon request manner, helping advisors and end clients identify the optimal lending solutions, identify the optimal way to generate liquidity, again, in both a proactive and reactive way. So you could probably connect some dots there, but more to come soon.
I'll tell you said it all. We are now out of time. Max, where can people find more information about Flourish?
You can find us at flourish.com. Come on in. You can check out cash, lending, annuities, get in touch with our team, but everything you need is on flourish.com.
Max, great talking to you, man. Thanks for being here.
Thanks, Craig. Really appreciate it.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. Flourish is building a private bank for independent advisors, providing them with a comprehensive suite of banking, lending, and insurance products to better serve their clients' holistic financial needs. Number 2, Flourish's cash management solution, called Flourish Cash, is differentiated by its simplicity, with one rate and one account, seamless advisor-client experience, and integration with other Flourish products like lending. Number 3, Flourish is exploring the possibility of charging RIA firms a platform fee to access its products and services, given the significant revenue opportunities it's generating for its most engaged partners. All right, you've reached the end of another episode of the Wealth Tech Today podcast. Thanks for listening. But before you go, head to our website, ezragroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Once a month, you receive an email chock full of wealth management goodness, news, information, and updates. You will not be disappointed. Thanks again for listening, and talk to you all again next time.